Whoever said money can't buy you happiness clearly never invested in the stock market on a good day. Welcome to our Savvy Stock Market Roundup, where we make sense of the Wall Street circus and maybe even have a laugh or two. So, what's the word on Wall Street? Well, on Monday, we saw the stock markets take a bit of a tumble, like a clumsy bear on roller skates. The Dow Jones Industrial Average lost 0.65%, the S&P 500 slipped 1.2%, and the Nasdaq Composite took a 1.79% tumble. It's like they all decided to have a synchronized swimming competition, but underwater. Now, you might ask, why the fall? Well, yields are rising like a good sourdough, and there are concerns over the conflict in the Middle East. The yield on the 10-year Treasury rose above 4.6%, reaching its highest point since mid-November. That's like climbing Mount Everest without the frostbite and oxygen deprivation. Retail sales data showed a 0.7% increase in March, indicating that consumers are still spending despite inflation. It's like a shopping spree with monopoly money, but the monopoly money is real, and the shopping spree is for essentials like bread and milk. The situation in the Middle East is also causing some unease. Iran decided to send some uninvited drones and missiles Israel's way, which, as you can imagine, didn't exactly soothe investor nerves. Oil prices settled lower after the attack, but there are still concerns about potential volatility. It's like trying to juggle flaming torches while walking on a tightrope. Companies like Salesforce and Goldman Sachs influenced market movements, sort of like a puppet master pulling the strings. The S&P 500 and Nasdaq Composite made new lows, with Boeing being one of the struggling stocks. JP Morgan noted that even if companies exceed earnings expectations, stock performance may not reflect this due to market re-rating and other concerns. It's a bit like acing a test and still getting a B because the teacher doesn't like your handwriting. The oil market reacted cautiously to Iran's attack, with U.S. crude and global benchmarks settling slightly lower. The Nasdaq Composite fell below its 50-day moving average for the first time since November 2023, potentially signaling a downtrend. It's like the roller coaster ride is finally heading down after that heart-stopping climb. Well, that's the roundup for today. Remember, the stock market may have its ups and downs, but at the end of the day, it's still better than betting on a three-legged horse. Until next time, keep your portfolios diversified and your spirits high. Thank you for watching. Please like and subscribe for more information.